All right, folks. So we're going to do some mic checks across the board here. I should be good to go on several different platforms here. And so just bear with me as we kind of wait for the clock down to about 12 o'clock here. And then we'll get started. And we'll be going over basically my setups. I'll kind of give you a little bit of description behind those, how I trade them, and what I've named them. And so we'll get started here just in a few seconds. Just give me a few minutes or a few seconds to get started, and then we'll go over those. Also, if you wouldn't mind, ask some questions if you have any. That kind of keeps me busy and active, and I appreciate any of your input as well. Just to give you a little bit of background, guys, I am a professional supply and demand trader. I have a little bit of education behind me for the last decade or so. I really started to get into supply and demand after I basically found myself sitting at I wouldn't say like rock bottom. I always feel like that sounds really weird, but my purpose was to finally figure out how to trade using technical analysis. Um, and so, a friend of mine said, "Hey, you should check out some supply and demand." And one thing that I'll tell you about supply and demand, really the big key about it is that we are trying to line ourselves up with institutional buying and selling. Okay. And we're able to locate these formations on a chart. Okay. And at the end of the day, I want everybody to understand indicators for me have always served as a purpose to make things more convenient. Okay. Now I'm going to teach you how to find supply and demand zones when the time is right. Okay. We're going to sit down. You're going to identify this stuff. But understand the indicators for me, it just makes my job so much quicker, so much easier. So I'll be showing you a little bit of that stuff, but what I want to concentrate on is my actual setups. Okay, so we're going to talk around those and kind of give you an idea of how I trade them. Okay, so let's go ahead and get started. Like I said, I love doing supply and demand. Supply and demand is identifying where institutions are buying and selling. And the idea is that retail traders, that's you and me, we often are told how to do things the opposite way that institutions are doing it. And so I want to be and want to make sure that I am on the right side of the trade. Now, it might sound easy to you, but demand levels, that would be the green boxes down here below, are where we want to buy, and the red boxes above are where we want to sell or be cautious. Okay, everybody understand that? So, again, demand is always below us, supply is above us. Okay, so the first setup that I like to trade is basically just your basics of supply and demand. Okay, I'll give you an example. This morning, we shorted down into the green box. Okay, this was our blueprint from this morning, and I want to go to a little bit higher time frame for you, okay, just so that we can capture what this looks like. So I send these out every morning. We get on the mic about 30 minutes before the open, and I base my entire portfolio off of the ES futures. Okay. So if I thinking that the ES futures are going to dip down into this green box, this is where I want to start getting aggressive on the long side in the market. If price pushes up into a supply zone, this is where I want to be cautious. I either go short or I'm looking at selling my longs. When we opened up this morning, we identified a supply zone here and we identified a demand zone here. Now, we did the same exact thing yesterday. So the market's been really nice to us. Okay. So we went short here this morning on the 41.62 level. We stayed patient. We coached. We looked for the move down into demand. And this is where I executed my SPX. And if you guys notice, I put our trades in for today. I forgot our Chewy trade. We've also been trimming that at about 30%. But SPX right now is a question mark because I'm not sure exactly where we're going to be. Now, it's already hit 100%, but I'm holding on to see if we can get a little bit more. And we'll get into that here in a few seconds. Okay. So, really quick, we identify supply and demand by using candle structure. That's all I need. Literally, just candle structure. I always like to tell people it's just like the beach. I live here in Florida, I live on the water. All right. And the heavier the blueprint or heavier the footprint, the more you'll see the footprint in the sand, right? If a little baby's running across the sand, you know, typically is like, hey, is that a footprint like of a human or is that like a bird, right? And then the heavier the person, the deeper the footprint. Well, it's the same way in the market, if you would. This is your beach, this is the sand. The heavier the candles, the more the buying pressure, the more volume that's behind that buying pressure. The smaller the candles, I don't really want to be on and with those guys that are basically retail traders. Okay. I'm looking for big candles and I'm looking for formations and I want to line myself up in that area. Okay. Very nice. Sarasota is beautiful. I am up north, but I do travel down to Sarasota. Actually, my old developer, he lives down there in Sarasota. What a beautiful town. It's really cool. So lucky you. So once we identify these, I had a great question the other day. We had one of our members here, uh, in the trading room here at Simpler. It said, "Hey, John, how do we react off of current events like FOMC? Jerome's going to be on the mic. We're going to have PPI, CPI. It's literally the same thing every single day. We identify these very high probable zones that could end up being a great buy or sell, and then we allow the news to work as a catalyst to push price there. So, what's really neat about supply and demand, and what I feel is the biggest edge on anything that's out there, is when I wake up in the morning, I'm able to coach my team and let them know where price is going to go. Now, you've probably been told most of your trading career is that we can't tell you where price can go. That's not actually true. Like this morning, I could tell you that price was going here and or here. What I can't tell you is how you are going to react here. But what I can do is teach you how we trade these zones. When price gets to these zones, there's a special technique that I like to do, but I also like to pay attention to my TTM Squeeze Pro. So the first lesson today, I want to make it very easy. My first and go-to setup would be supply and demand, folks. It's that simple. Now, notice in here that I have some of these lines, right? And a lot of traders have lines, a lot of people have indicators, and lines mean different things to different people. My lines, really quick, okay, they identify supply and demand as a playing field. Let me explain to you really quick. So let's say that we have some candle structure that's moving on up. Okay, we have inside, we got an up candle, it's moving up. Boom, we kind of stall here. We get what's called a topping wick, and then we move inside and down, prices come down. I identify a supply zone, I identify a demand zone. What you're going to notice is we have lines, okay, and let's just make them orange for the time being, and they're going to be a playing field. Notice that the box is really wide. Okay, the box is wide, or the zone, the buy zone and the sell zone are wide, but the trendy edges are identifying the zone. They are a playing field. Let me let you in on a secret. Trying to be too precise or too exact in the market is where a lot of traders have a really hard time. Okay. Everybody understand that? Repeat that. Seriously. Being too precise and trying to be perfect in trading is just going to lead to your overall, you're just going to judge yourself too much. Okay. So take your time. Just know that we want to be within a playing field of institutional buying and selling. Let me go ahead and show you the examples. This is a trendy edge. It's really straightforward. When price moves up into the edge, I want to be looking to get short or out of my longs or bringing stops up on my longs. When price comes down close into the lower trendy edge, I want to be looking to go long. Notice we identify the zone. Notice that we identify the zone. And then once again, this is just a playing field. Okay. So my go to is going to be supply and demand. Okay. Now, the next thing that I want to talk about is going to be my next go to, and that's called the pre market zone. This is our next setup. Okay. This is and can be found on a 5-minute chart. I'm giving you examples from today, and give me 1 second as this loads. The pre-market zone automates and is put on the chart 5 minutes before the open. It comes with a couple things. It's going to tell you the PMZ high, which is this number right here, and it's going to tell you the PMZ low, which is going to be this number here. Now, this is pretty straightforward. I have made this process probably one of the most mechanical processes out there. It is very simple to understand. You go long above it and you go short below it. Your risk is right here. It tells you what your risk is. The risk is defined by the difference between the top and the bottom line. And this is how we trade this. Notice today, and again, I can't make this stuff up, guys. All this was here before, and I wouldn't be here teaching you and saying that if I was pulling your leg. Let's go ahead and zoom in. Notice that price is here. We coached. We were looking for the green box. We go short here, whether you want to go short on SPY, whether you want to go short on micros, whether you want to go short on ES futures, whether you want to go short on SPX, it's up to you. See, the only thing that I truly care about before I take a trade, and whether it's a supply and demand trade, whether it's a PMZ or pre-market zone is what PMZ stands for, what I teach is, are you comfortable with the risk? And if you are, we execute the trade, and we execute those trades into automated targets. Okay. This is probably one of our favorite setups right here because, once again, a lot of times your risk is very low and your return is very nice. Okay. So let's go ahead and just go through a couple different things that we were looking at today. Okay. So again, we have the edges that identify supply and demand, and now we have the pre-market zone. Okay. Now, when I do this, notice that I have some scanners over here. Okay. And this is not about my indicators, guys. This is about my setups. The biggest thing for me is that this watch list, which is really cool because it's a watch list scanner, which is a lot different than your normal scanner. It's scanning within a watch list, and it's letting me know if my PMZ trades are setting up. For example, over here at Tesla, at some point it was yellow. When it's yellow, that means that price is in the middle of the PMZ. We look to take the trade to the upside, okay, on a break to the up. Your risk today is only 20 cents, okay? Let's go over here to Netflix. We just closed Netflix, by the way, at 165%, I believe, okay? And I'm not sure if it's still going, but let's take a look. Yes, it's still going. All right, so these were really, really nice. Now, I want to show you the beauty of the PMZ. All right, guys? Check this out. This is the pre-market zone, or PMZ. Notice that your risk today is only 51 cents. Notice that the automated targets here are going to be here, and I have one up here. Okay? If you do the math, your risk is about 51 cents, whether you're trading equity or whether you're trading options. This really gives you an idea of what you're willing to risk. And we know before we take the trade where price could end up going. So in this case, I was willing to take a trade. We push to the upside and boom, there we go. Okay. Now, what is the PMZ? Let's talk about that just really quick so everybody understands. We know that the edges are a playing field of supply and demand. They identify supply and demand on multiple time frames. Okay. The PMZ is exactly what it stands for, the pre-market zone. Let me give you a little bit of backstory. A lot of traders through my entire career told me that the pre-market action was not important. I asked, why is it not important? They would say things like there's not enough volume. But I realized and I came up with an equation that A plus B equals volume, not volume equals A plus B. And if I want to think like an institution, I'm not I'm not waiting for people to buy. You see what I'm saying? I'm not waiting for someone to tell me, "Hey, John, Captain Obvious, there's volume here and the market's moving up." And I'm thinking to myself, "Well, duh, market's moving up." I want to identify these levels where there's higher probabilities of these trades moving up and or down, and I want to be part of that equation, folks. That's where I want to be. Let me give you an example. Let's say the price is coming down into one of our zones. Most traders would tell you there is no volume in here. What are you thinking? Price then moves up. We are trimming and or selling. All of a sudden, retail traders are saying, "Hey folks, there's a lot of volume here. Hey folks, unusual options activity. There's a lot of people buying. We're selling." And by the time the average trader jumps in, price then pulls back. Okay, whether it's just digesting or not. And I'm not saying this is the wrong way to do things, but what we have found is that by identifying levels of demand, give us the edge on the market. Well, the pre-market zone works a lot like that. Okay, most people need a lot of confirmation before they start to get into a trade. You also hear things like, "Hey, trading is not good the first 10 or 15 minutes of the market." Folks, I'm here to tell you that most money in the market is probably made in the first hour most of the time. And then after that, we are here to manage our trades. So there's some great trading that happens first thing in the morning. And what I've done is I've taken the pre-market zone, I've figured out a specific time within the pre-market, and I have found that those levels to be very, very accurate and whether or not the trade is going to work to the upside or downside. Now, there are several things behind this. What is the current trend? For example, if in this case Netflix were moving to the upside, and this is an uptrend here, and I think we'd all agree to that. Well, after a big move, prices kind of digest, right? So I'm looking for the trend to continue up. So I'm paying attention to my banners. My banners say, "Hey, it's extremely bullish this week." And I say, "Okay, cool. It's had a couple days to digest. Let's watch this trade as it moves. And if it breaks over the PMZ, I'm going long." Okay. Everybody understand that. Does anybody have a question about the pre-market zone or the trendy edges? And we'll go into it a little bit more. But those are my two first setups that I want to teach you guys. Okay. Again, how do I trade them? I go long above and or I go short below. I always pay attention to my risk. And before I execute a trade, I say to myself, is the risk okay according to my reward? Anybody have any questions about that? Units on risk. So what do you mean by that, units on risk? Sorry. Yeah, dollar percent. So the way that I want to trade this, okay, every time I go into the trade, this is what I teach, and hopefully you guys can take this with you. If you want to join, the crew here at Simpler Trading and trade with us, you're going to hear a lot of this. Matter of fact, every single morning I remind traders about this. Every time I take a trade, and I learned this from the late Mark Douglas, I always say to myself, how much am I willing to lose? Okay. So let's just kind of give you a little bit of background. If I knew that my risk was 51 cents today and I did a delta 50, let me see how much you guys know out there. All right. Let's just say that I did a delta 50. All right. In the option world, if I took a delta 50, about how much would I lose if the underlying equity price dropped 51 cents? Let's just say 50 cents. Okay. So Trader John, Coop, anybody. How much would I lose? That's right. Freak yeah. Man, I'm happy. It usually takes people forever to answer that. So that's a great thing. And if anybody didn't know that answer, it's okay. Please speak up and maybe we can give you some information to help you with Delta. All right. It's very important to understand. So if I'm trading here with options, okay, this is going to tell me right away how much I could potentially lose. That's all I care about, folks. I don't take trades concerned about how much I'm going to make. I take trades based on how much I can lose. The average retail trader only sees dollar signs. They tend to wait for too many things to line up, and it's just the wrong way to approach trading, in my opinion. Okay. So with this easy setup here, I know how much I can lose. I know how much I want to put into my trade, and that's according to my risk tolerance. So percent, money amount, allocation. I'm going to leave you with this, not leave because I'm not leaving. I talk a lot. I want you to really think about this and I want you to write this in your journal. How much are you willing to lose? That's what's important. Please have that number next to you. And if you say that number to yourself, I want you to cut it in half for the first week or two. So if you say, John, I'm okay with losing $500, cut it down to 250. Okay. See if you can actually be okay with that, because most people, they say it before it happens, and then when it happens, guess what happens? They freak out, they can't sleep at night, they're mad, they revenge trade. There's all these craziness things that can happen, guys. Trading is not easy, but if we could take our setups and we can define a risk and we could tell ourselves what that risk looks like, guess what? Execution becomes easier. One of the biggest things that had a hard time with when I was younger and first getting into my trading is I would copy people and follow them, but they didn't have a risk assessment. They didn't know where the targets were. So when I lost money, folks, I was pretty mad. It's already bad enough when you lose money, but if you don't know why you lost money or you don't know what your risk was to start off, you could see where that could be super dangerous. Do you guys not agree with me? So what happens, okay, is that I do understand how much I can lose here. And then I execute my trade. Okay. Now, let's move on. And I'm going to show you more examples of this stuff here in a second. Okay. So let's just make sure we got it down. So I have the trendy edges, and we'll go over that a little bit more in detail here in a second. The identify supply and demand. We have the pre-market zone, which I told you that it's a specific time within the pre-market that I found that is really bullish or bearish, depending on the trend. All right. And then my next one, guys, is going to be the cloud, the EMA cloud. Okay. Everybody ready for that? Are we okay to move on before I go into this next one? Are we good to go? Because the cloud is really important. And there's a lot of stuff that you can do with the cloud that can really help you out in your trading. And I want to help you out in your trading. Okay. All right. So let's see how much you guys know. The cloud is an exponential moving average. Okay. What what purpose does this cloud serve? Can somebody tell me, to you, what purpose does this cloud serve to you? Okay, trend, Dana. Good. Probability zone. Okay. Okay, so if we're above it, what would it be in your mind? Support, right? Good one, Alacat. Okay. Dr. Ba, pull back buy. Cool. So you're in agreement that it could be support. Okay. What if we're below it? It's resistance, right? So I want you guys to say this out loud and put it in your journal. When you're above a cloud, it is support until proven otherwise. When you are below a cloud, it is resistance until proven otherwise. Okay? It's as simple as that. Now, let me ask you a question. If you told me right now that Netflix, where this cloud is support, what if it broke all the way through? What do you think causes that? Right? What causes that? Well, buyers step out of the way, right? So the way that we use clouds is we use them in conjunction with our strategy of supply and demand. Notice how price is pulling back right now on Netflix. Okay. Now I'm going to take you to a higher time frame. Okay. Just like this. Let's go into the weekly. All right. Now, and we'll talk about ACDC here in a second. Now, what I will tell you when I teach you the structure, and if you already know it, congratulations. But if when I teach you the structure, you would know that we right here are in a supply zone. Okay. So a cloud is only so comfy to trade off until it's not. And you need to be aware where certain levels are where price can stop. And that's what I do. I teach you where price will reject and where price is supported. The cloud is simply just a trend tool to help you stay in a trade. Now, I'll tell you that my cloud is a little robust. Okay. You'll notice a lot of people have clouds that kind of look the same. It's green, it's red, it's green. But what I also want you to notice is that the candles change color with the cloud. These are EMAs. They're turning green, they're turning white, and they're turning red. Green means momentum up, white means neutral, red means momentum down. But let me show you a quick example of what we understand when we're trading. Price breaks down below the PMZ. We've already went over that, correct? Now let me ask you guys a question. If you went short on the PMZ underneath this, what would be your target? Completely different, Dr. Bob. So let me ask you a question. If we went short there, what would be your target? Dana D, the yellow gold line on your screen. Cool. Target is a demand zone. Very nice, Trader Joe. Dr. Bob, previous demand. There you go. All right. So remember, again, edges are the playing field of demand and supply. And where all of this ties in together, and you can see it all in this one picture, guys, is that I know my risk. Cloud is telling me, hey, we're going from green to white. My PMZ is telling me to go short. My edge is telling me where we have a playing field. I can do the math. And in this specific scenario, yesterday on Netflix, it was roughly 335 and a quarter by 334 and 31. Let's just say it was a dollar of risk. I go short. My first level down here was 332. Okay. And then down here, my level is around 330. Does the risk make sense if my reward is here and here? If you say yes, you take the trade. And what's cool about this is you don't have to wait, it's already there. That's what I love about supply and demand. That's what I love about my strategy. I don't need a bunch of things to line up. They're not moving indicators. They are indicators that stay still on your chart. They are indicators that are there weeks, months, day, years in advance. I just wait for the news catalyst to push price into one of my levels, and then I execute them with a plan with risk at the top of that plan. Okay, let that sink in because when I first started, I didn't have any of that. And I got sick and tired of losing and not understanding why I lost. And believe it or not, this might sound maybe it's because I'm older, but even when you win and you can't understand why you won or made money in the market, that's got to be frustrating. Because don't you want to repeat that? Don't you want to understand how to do that again? I hope so. Okay. So the cloud, it is support when we're above it. It is resistance when we're below it. But there's a very, very important part about this. It is fractal. I could take you to a 4 hour chart and I can tell you once price broke above here, my plan from a 4 hour trade would be Hey, ladies and gentlemen, I'm going long with a stop below the cloud, and I am targeting my trendy edge here, my trendy edge here, and my trendy edge here. That is a plan. You understand your risk. Boom. Right when we break over, your risk is about $3. Your reward to the upside is about 7. Then it turns into 10, and then it turns into 30. Do you like that risk to reward? Is price staying above the cloud? Is the cloud supported, or is price supported by the cloud? Yes, it is. Let's go ahead and go over here to the next time frame. And let's make this a daily. Sorry, I was kind of going through some stuff here earlier. Okay, folks, fractal. This is a cloud. It changes. It has different levels. Everybody's different. When price breaks over the daily cloud, boom, I want to go long. What is my stop? In this case, it's the same exact thing. My targets are still the same. This is where we're headed. That's what I believe, as long as my stop is holding. Let's go ahead and go to the weekly. Folks, same exact thing. Price breaks over the cloud. I want to be long. I have these levels to contend with. Okay. Over here, folks, on a weekly, price goes from green to white to red. I want to be short. Where do I want to be short with? Guys, even though this is a weekly chart, where do I want to short to? Where do we want to short to? Prior demand, right? That's right. Previous demand, demand zone, edges, all that good stuff. Okay. I'm going to go into some specifics here in a second for you. And I'm going to keep reminding you. We just went over the edges, which are a playing field of supply and demand. We just went over the PMZ, the pre-market zone that gives you risk attached to your trade. It's one of our favorite indicators, right? But it is a setup. The next one is the cloud. It's an exponential moving average. Mine is very robust. It has buy and sell signals in it. It changes the candles colors. It does a lot of cool stuff. All right. The next thing, all right. The next thing, ACDC. All right. That's what I call it. ACDC. And one of our members that's been with me for 6 or 7 years told me, John, we're calling it the ACDC. I said, I love that name. ACDC was the reason why we took this trade this morning on Netflix. Why did we take it? I'm going to make this really easy. See, everybody see the green arrows and the red arrows on my chart? Do you guys see this? You see that right there? We have green arrows and red arrows. Well, the green one is called an accelerator, and the red one is called a decelerator. It's really straightforward. ACDC equals ME. That is actually a trade that we came up with many, many years ago. Once price goes above the decelerator, our stops go in, and our target is this purple line, which is called the monthly edge. Short ME, ACDC, accelerator, decelerator equals monthly edge. That's it. That's the reason why we took the trade. That's the reason why we made 165%. That's it. Why does this work? Because these are levels that I back tested, and they give me a higher probability of seeing this level as long as price can stay above this level. Okay. Now, let me show you guys a couple things really quick. Let's go into a couple details. What time is it? 12:34. This is perfect. Okay. And let's pull this up. Okay, guys. So let's start right here. Are you guys ready? Are you falling asleep? Are we good to go? Can we continue to move on? Just want to make sure. All right, let's go. All right, so the first thing is I'm going to read you some stuff and then I want you to understand. Obviously, this is going to be recorded and put on my page here at Simpler so that you guys can go back and look at this. Okay. All right, so the edges, let's talk about them really quick. There is a yellow edge, there's a pink edge, there's a blue edge, and there's actually an orange edge as well. The yellow edge is called a weekly edge or WE. This is for traders who like to scalp and or trade on a 1 to 5 day time frame. If you are that trader, these are the edges you would concentrate primarily on. The pink edges are the monthly edges. We call them the ME or the monthly edge. These are for swing traders, and these are people that are looking for trades that last anywhere from 2 weeks and up. The blue edges are probably my favorite because these are the ones that this is where really a lot of fear and greed come into play. And this is something that you want to be in the trade. It says 30 days here, but to be honest with you, I use these for leap trades. Okay, so I like to trade these. I would say at least at a minimum 6 months to a year. Okay, and then now we have orange ones, which are called day. And I say now they've been on here forever. I'm not sure why I forgot to put that on here. Okay, this concept may seem easy, guys, okay? But the human psyche, the center of individuals' emotions, thought, and behavior, works completely opposite in trading. The idea here is that we go long at the bottom edges and we go short at the upper edges, okay? Everybody got that? We go long at the lower edges, we go short at the upper edges. Or if you're long and you're approaching an upper edge, we look to bring our stops up. Okay. Next, let's talk about the weekly edges. You'll notice on my charts that you don't see all of these different lines. And I do that because I don't want so much noise on my chart. Okay. But the cool thing is that you can go back and you can back test and see the value of the levels. This is an example of the weekly edges. I have set the chart on a 4 hour and selected to see past the weekly edges on the script. I want you to take note on where it's best to buy versus selling. Notice you can see all the circles. We buy, we sell, we sell. We buy down here, we sell here. We buy down here, we sell up here. We buy down here. It's pretty straightforward, folks. Okay. The next one. This is your monthly edge back testing. Folks, once again, a trader can use a daily to weekly candles here. The biggest takeaway here is to understand you're working with higher time frame. Okay? This is a higher time frame supply and demand zone. Although these levels can work very quickly, I have learned that more times than not, these take time to develop into a profitable trade. This is why I prefer swinging the monthly edge. The yearly edges, same thing. You can go back and you can test them to see how they work. I'm very confident that my levels work very well. A trader can use weekly to quarter candles on these. Once again, I believe that institutional buying and selling or institutions are not paying attention to the baby footprints. That's you and me, by the way. We're the babies. They're paying attention to the bigger candles, the quarterly, the monthly, the yearly candles. Okay. My personal preference is at least 60 to 356 days on these. It's important to see the levels work. And although one may get flushed, it would be smart to create an alert on a reclaim. And what I mean by that, folks, is just because a level gets flushed, it would be smart to put an alert here. And when it reclaims, I'm looking to go long. Surf traders. So how do they differ from the quant pivots? The best thing I can tell you without telling you what the quant pivots are, because I actually don't know, they're not the same. They are supply and demand zones. Quant pivots, I don't think have anything to do with supply and demand. All right, guys. So the daily edges. All right. This is for my folks who are looking to make profits on the day, intraday trading. We look to go long at the bottom and we look to trim as we get up into our automated targets. Okay. Very straightforward. Okay. Here's a great example. A great example that edges on a random chart. This is ZS. Okay. It shows an extremely bullish trend. You guys can see that right here. Okay. Extremely bullish trend on all time frames. Notice that price came into the lower edge, and once the stock reclaimed the lower edge, it moved all the way to the upper edge of $9+ and was currently 12 from that weekly edge. Folks, again, I can't make this stuff up. It's not after the fact. These edges are there before price. And so you can see here we get a reclaim, and then we're looking to take the trade. And again, close into your automated targets. Okay. How about the futures? Everybody wants to know about the futures. I'm very confident that we have some of the best future traders I've ever seen, ever. And I'm very proud of that. Here is an example of the ES moving from the daily lower edge to the weekly mid edge. Okay. That would be down here. You guys can see that. Okay. Know that the banners are neutral on the week. Just something to take into consideration. Notice right here as well that this is an upper monthly and we're looking for price to stall here. Okay. Again, support, resistance in this level. RJ, great question. Do you trade fractally the same equities over and over again on multiple time frames? Well, I'll give you an example. And disclaimer, really quick, guys. I don't have a Discord. I am here at Simpler Trading. I use my Discord to track my alerts. Okay, my alerts come straight from my API to the room, and so right here, just to answer your question, I don't. You will see across the board, we are trading all sorts of different stuff. Okay, all sorts of different stuff. I trade equity, futures, options, you name it. What's beautiful about supply and demand and my setups is I just pay attention to my scanners, but I do have traders who come here who only concentrate on SPY, SPX, and so forth. Okay, with the same strategy. Okay. The next thing is what we call the line in the sand. Okay, this is the line in the sand setup. Now, the line in the sand is part of our package, right? And it's not the cash close. What we found a long time ago is that there's a maintenance period, right? Everybody knows that in the futures. And that maintenance period creates a level of structure, I should say, on a smaller time frame. When price is above it, we look to go long. When price is below it, we look to go short. Just remember that for every single one of my levels. Notice here that price moved up into one of our automated edges. Once price came down into the line in the sand, we look to go long. And once again, we traded to the upside. We don't need to go in specifics about the Fibonacci's here, but I do teach that. Okay. And it works really, really well. Okay. And here are more examples. You can see the trendy edge working very well on the futures as well. Okay. Now I want to talk about upgrades. All right. This is pretty cool. All right. Upgrades in the market, just really quick. All right. Upgrades. We all can agree that an upgrade is awesome. And if you're lucky enough to already be in on a big gap up, then it's even better. However, a smart trader will recognize that an analyst or any sort of news is just a catalyst to push price into supply or demand, or in this case, into trendy edges. Okay. Resistance, support, etc. In this case, price during pre-market hours was pushed right into the yearly edge. This is Airbnb back in the day when it was $145.65. Okay. Everybody see that? They had an upgrade. What they don't tell you is that they push upgrades typically into supply, and most retail traders will take the trade to the upside, not realizing that the analyst just pushed you into a supply zone. Where supply really helps you, folks, is that you identify this, you start to realize that you're not on the right side. They're out to get you. And supply and demand helps with that. Notice here, boom, they upgrade it. It moves up into the edge. It then breaks down right into our lower edge time frames, and then it's a buy from there. The point here, folks, you wait for the levels, you execute them. It's very, very sequential and methodical. Okay. So, again, guys, really quick, the trendy setups are pretty straightforward. The edges identify supply and demand, a playing field. I have the PMZ, the pre-market zone. This is for our traders that understand, and every trade that we take is all about risk, okay? Like, we got to know what our risk is. But at the end of the day, the PMZ just makes it a little bit easier for people to execute because you got this little box, you understand what your risk is, you know where your targets are, and most of the time we can make quick money first thing in the morning. Okay. The cloud is there to help us with trend. The line in the sand was built for the futures, but a lot of people use it for the equity as well. And it's pretty straightforward. After that, every single morning that I wake up, I come into the market and I share my analysis based off of the ES futures. I give you where to go long, where to go short. I give you the overall trend. We coach you through the actual trade. And then from there, we manage our trades. Okay. So this over here, these are my scanners, guys. This just makes it easier. I just want to show you really quick. So you have all these edges, right? Well, they're convenient for me. I don't need to go back and keep trying to find them, but I do recommend you to start that way. And that's why I teach you the old fashioned way of finding. And then here, this is a convenience for me. It just makes it that much easier for me to find them. For example, if I open this up, whatever names that I have in my watch list is going to tell me, and I'm going to freeze my screen really quick. See how it tells you LE, that's lower edge, UE is upper edge. Well, if it's an upper edge, it's supply. If it's a lower edge, it's demand. So I immediately know where I want to trade. So for you folks that were asking me, do you just trade a few names? You could come in here and you could put your few names in here and you can just follow what the scanners are telling you, guys. All right. Does everybody understand that? And then over here on the PMZ signal, these really light up 5 minutes after the market. And all I got to do is click on them and I get there and I trade them. For example, there's Tesla breaking down, right? But it's choppy right now. All right. But I'm just saying, like, this is the easiest way I could do this instead of me having to click through every chart and go, hey, I wonder if something's at a supply zone or a demand zone. I got it right here. Okay. And so, like, for example, the lower edges are demand. I got Roku in there, I got Disney in there, and I have Twilio, TWLO. All right. So this is for my long term traders. All right. Just something I want to show you. All right. So after going through all of that with you guys, I would say those are my main setups that I trade. And the specifics, like exactly how I get into these trades, has a lot to do with a few things. Boom. I want to get into a demand zone. I'm paying attention to my squeeze pro down here. Okay. If we're going short at a supply zone, same thing. I'm paying attention to my tool down here to kind of help me out. But at the end of the day, my levels come first, my risk comes first, then I execute the trade, and then I'm good to go. Okay. Any questions on any of the setups that I just shared with you? Now I can concentrate on your questions, folks. And I apologize if I missed anybody. So I already answered about the quant pivots. They're not the same. Uh, yeah, so Earl, somebody asked me about SPX. Okay. come over here. And you guys can ask me like, so you mean from a short time frame or a long time frame? What would you like to know? So next trader, I'm here. Yeah, I'm here at Simpler. I am no longer trendy trading per se. Gotcha, RJ. Very nice. Good job. Yeah, and I have ES futures that I'm about to get out of as well. I'm up about 200 here. So I'm gonna it's been a good day. See if we can execute there. Yep. Next month or two. So here's the thing: we don't need to look at ES. This is why I or sorry, we don't need to look at SPX. I'm going to show you how to concentrate on just the ES futures. Okay, we do a blueprint every single day. I do them over the weekend for the daily, the weekly, and the monthly. All that good stuff. Sorry, the daily, the weekly, the 4 hour, and we trade SPX off of those. Folks, here's a great example of SPX. Right, so coming down into an automated target, notice that we're coming into it. We look to take a trade to the upside. It's just a quick move. We just got an announcement. Some of you guys went short. You went short down here. You covered into here. I just covered my ES futures, made a quick, easy 200 bucks, right? And let's see what else is going on. That's about it. All right. So again, you react at the levels, react at the levels. What's really great about what we teach, how I teach it, and most of all, I always say ask the members about their experience. Don't ask me. Okay. I want to know, are your members doing well? That's all I care about. Are my members doing well? Let them speak for my process. I like my process, but you know, that's like asking the owner of something like, "Hey, what do you think?" I don't you already know how I feel. I love it. But you got to ask people, how are they doing? Are they jiving with it? Are they resonating with it? That's what matters. If you can't understand a plan in the morning, I'm doing a disservice to you. If you don't understand where I'd go long, I'm doing a disservice to you. If you don't understand where I'd go short, if you don't understand why the 23.6 is bullish opposed to the 618, all these things I want you to understand. I want you to know. That way we can all be a part of this community together and win and lose, but not be shocked. We're trading the same levels. We all have risk attached to our trades. That was my vision many years ago because I started off just like anybody else, moving room to room, not at Simpler, but room to room out there. And it was always the same BS. It really was. I felt like a fish in a fishbowl. Okay. And I would sit there and wait for people to feed me trades. And when the trades came out, we'd all swoop to the top and we'd try to get that trade. And just like a fish, I was always left with the crumbs. I didn't quite understand. I couldn't get the same feels, like nothing was making sense to me. My vision was to take a methodology, teach it to you, and guess what? People hang around regardless if they know how to do it because we're all on the same team. And that's really all I want for everybody. Okay. So once again, levels working. This level right here is resistance till proven otherwise. Um, right here, your cloud is resistance until proven otherwise, but you can see both levels are working at the moment. Far as like where I feel the SPX will go, and if you guys don't have any other questions, then I will finish after I give you this quick analysis of SPX. But again, I use ES futures. I don't even look at SPX when I trade SPX. I trade the ES futures blueprint. Okay. And I want to show it to you really quick. And if you guys haven't watched any of my stuff, I do a broad market analysis video every week. It's free. You guys should check it out. I talk about this stuff. I give you plans before they happen, and we trade off of those levels. Okay. So here we go. This is what it looks like. You're asking me what SPX looks like. Okay. I'm going to open this up. We hit a supply zone. This same supply zone has been here for over a month, folks. We've been well aware of that here. Every time it comes up, this has been a short. This is my bigger support. It's worked now for 3 weeks. Okay. We are supported by 4113. We are supply levels at or around 4172. And as long as price stays between these two, I call it neutral. And I think we focus on the pre-market zones plus the lower time frame zones. We're essentially just trading within a very tight range. As I move over here into the daily, we make it pretty straightforward. We have a long trigger, we have a resistance, and we have a short trigger. Once again, we're just hanging in a smaller time zone, and that's where we want to be. Okay. We have our 4 hour, and then we have our intraday. And this has been our intraday, guys. You can see we came right back down into demand zone. We started to pick up. There is a potential with almost 2 hours left. If we do not take out the pivot low here, I believe we will close here. That is my intraday analysis. It's very straightforward. We've already done well. Let's keep doing great. And if you guys have other questions, just reach out. But I'm going to take off for now. I really appreciate y'all's time.